Hello and welcome to this video. I'm Faiz Khan, founder of Eduhons. Eduhons helps accounting students to pass their exams confidently by making difficult concepts really easy to understand. So in this video, we're working through, it's still Matric accounting, and we are working through question 2 of paper 2 of November 2020. So in this video, I'll be working through question 2.1, costing statements and so forth. So let's get straight into it. So the format of the class is basically, I will read through the scenario, and then we will try to understand what is happening as we read through the scenario, and then we will be answering it using Google Sheets, okay, or Excel. So they say perfect fit manufacturers. The business produces formal shirts. The financial year ended 28 February 2021. So there you can see that they'll be talking about a specific financial year end, 28 February 2021. So if the financial year end is 28 February 2021, that means the beginning of the year must have been 1 March 2020. So our financial year is running 1 March 2020 to 28 February 2021. Remember, they are a manufacturer, so they produce things, they manufacture things. So like Coca-Cola, Coca-Cola is a manufacturer, they make the Coke. Whereas Pick n Pay, ShopRite, and so forth, they are retailers, so they sell a ready-made product. Pick n Pay, ShopRite, Checkers don't manufacture anything. They buy completed goods and then they sell it off. So they would, so when we come to trading stock, they will have purchases. But when we come to, when we have dealing with a manufacturer, they produce their own, inventory. So we call it production or manufacturing, okay? So here they're asking us for the required 2.1.1, prepare the production cost statement, and then 2.1.2, calculate. There's two things we have to calculate: gross profit earned on sale of shirts. So take note, they're asking us for gross profit, not gross profit percentage. And then they're asking us for markup percentage achieved on shirts. So just pick up the subtle difference. The first bullet point is purely gross profit, a rand value, not a percentage. And then the second one is a percentage, but not gross profit, but rather markup percentage. Okay. So let's read the information. So here we have stock information. Part A, stock on hand. We have work in progress. There's a question mark. We have finished goods, which is 400 shirts valued using the FIFO method. Then on 1 March 2020, work in progress was 230. Finished goods shirts is 900 shirts at 380 Rand, which gives a total of 342. So part B, they say the bookkeeper calculated the costs below. Some errors were made. So direct material costs, we have 1,575,000 Rand. Selling and distribution costs, which is 385,000 Rand. Administration costs, which is 256,400 Rand. Then we have direct labor costs, there's a question mark. And then we have factory overhead costs, which is 518,800 Rand. 518,800 Rand. So errors and omissions. So here we have payment to quick deliveries, 75,000 Rand for carriage on raw materials was incorrectly allocated to selling and distribution costs. So the 75,000 Rand is included over here. However, that's not the correct place. The 75,000 Rand, because it is transport on raw materials, it is a cost on raw materials. So therefore, the 75,000 Rand should be included over here. Okay, so we should include it over here. So in order for us to correct it, we will subtract it from selling and distribution, and we will add it to direct material cost. Okay, then they say the entire insurance cost of 25,200 was transferred to the administration cost account. So the 25,200 is included over here. Okay, and that is incorrect because 2/3 of that amount should actually be allocated to factory overheads. So what we'll have to do to correct this, we must subtract 2/3 from administration costs and we must add it to factory overheads. Then we have the factory overhead cost account included an amount of 117,600 Rand for water and electricity. The bookkeeper had incorrectly allocated this expense to factory overhead cost account included an amount of 117,600 Rand for water and electricity. The bookkeeper had incorrectly allocated this expense to factory administration and selling and distribution in the ratio of 6:3:1. The correct ratio is 5:4:1. So we have to fix that up. Okay, so we'll see how to fix that up. Then we have prime cost equals 2,555,000 Rand. So remember, what is prime cost? Prime cost equals direct material cost plus direct labor costs. So here you can see direct labor we don't know. So we can work out direct labor costs by taking prime costs and by taking the correct direct material costs. Okay. Then they say production and sales for the year is 7,600 shirts were produced at a unit cost of 420. 8,100 shirts were sold for 4,860,000 Rand. Okay, so I think that's all. Okay, so that's all. So let's work through this. So what we're going to answer, we're going to answer, prepare the production cost statement. So let's switch over into Google Sheets. Let me just switch over into Google Sheets. Okay. So here we're going to have, I think it was 2.1.1. Okay, so 2.1.1, 2.1.1. So we want the production cost statement for February, for the year ended 28 February 2021. Okay. So production cost statement for the year ended 28 February 2021. Okay, so how does it start off? Let me just quickly have here details amount. Okay, so that's what I will look. I'll put the workings over here. Okay, workings is not part of the statement. Okay, so the details, we'll start off with direct material cost. We will then we will have direct labor cost, and this will give us prime cost. Okay, this will give us prime cost. Prime cost. So remember, direct material cost plus direct labor cost gives you prime cost. So let's just do that. Then we will have factory overhead cost, and then prime cost plus factory overhead cost. So prime cost plus factory overhead cost will give us total manufacturing cost. Okay, so important, direct material plus direct labor gives us prime cost. Prime cost plus factory overhead cost will give us total manufacturing cost. Okay, then we will say total manufacturing cost. Then we will say opening work in progress. Okay, then we'll just have another amount over here. Total, then we get an amount over here. Then we will have closing work in progress. Okay, then we will just get a cost of goods manufactured. Okay, so then we'll get cost of goods manufactured. Okay. Okay, so to do this, get our numbers right. Okay, so let's have a look how we will deal with this. I'm just going to take a longer route just to show you how to fix the. I'm just going to take a longer route just to, because we don't have to fix everything, but I want to fix everything relating to this errors and omissions. So I'm going to do a separate calculation for it. So let's just quickly do that calculation. Okay, so I just want to show you, so I'm going a little bit further. We don't require everything for this question, but I want to just do the all the fixes so that we can see how it fits in. So I'm just going to do your calculations. Okay, so our calculations. So given amounts, details, amounts given, adjustment, adjusted amount. Okay, then I'm just going to provide an explanation. You don't need this in the exam, obviously, but you want to know why you're doing what you're doing. Explanation. Okay. So we were given direct material costs, selling and administration costs. Let me see if I can copy it. So direct material cost. Okay, direct material costs, selling and administration costs, selling and distribution costs, sorry. Then we have administration costs. Direct labor cost. And then factory overhead costs. So the amount 1575 and 385, 1575, 385. Then we had 256 400, 256 400, 256,400, and we had 518,800. 518,800. Okay. So I just want to fix up all the numbers, and then I will show you how to do it quickly in an exam. The purpose of going a little bit further is just so you have an understanding. Okay, so we're not just focusing on answering the question. Yes, I am focused on answering the question, but I also want to show you how to think through. So in the first one, they told us payment to quick deliveries, 75,000 Rand for carriage on raw materials, was incorrectly allocated to selling and distribution costs. So 75,000 Rand was incorrectly included in over here. So because it's incorrectly included, in order to remove it, we must subtract it. Included means we added it to selling and distribution, but we don't want it there. So therefore, we remove it. Okay. Where should it have gone? Because it relates to carriage on raw materials, we should have included it in a direct material costs. Okay. So the explanation here is costs incorrectly included in selling and distribution. Okay, then we have the entire insurance amount of 25,200 was transferred to the administration costs. 2/3 of this expense should be allocated to the factory. Should be allocated to the factory. So what are we doing over here? So basically 2/3 of that of 25,000 Rand. So included in administration costs is 25,200 Rand. But 2/3 of the 25,200 Rand should have been allocated to factory and overheads. So therefore we need to remove 2/3 of the 25,200. So we'll say 25,200 multiplied by 2 divided by 3. Okay, so incorrectly included in admin. Okay, should be in factory costs. So therefore over here, we're also going to take out 2/3 because they included the full amount in administration costs. But 2/3 of that amount should have been included in factory overhead. So what do? We say equal, we say minus 25,200 multiplied by 2 divided by 3. So we're going to remove 16,800 and we add it to this over here. So 25,200 multiplied by 2 divided by 3. Okay, so we add the 16,800. Then, last one, they say the factory overhead costs included an amount of, the factory overhead costs included an amount of 117,600 for water and electricity. The bookkeeper had incorrectly allocated this expense to factory, administration, and selling distribution in the in this ratio of 6:3:1. The correct ratio is 5:4:1. Okay, so we need to have a look how we need to allocate this amount correctly. Okay, so we can work out what is the correct amount. Okay, so we know, so what do we know? So to get this correct amount, what do we know? So I'm just going to, once again, I'm just going to go a little bit longer so we can see what's happening. Okay. So we have factory. You just see how they split it now. So it is factory, admin, selling and distribution. Factory, admin, selling and distribution. Admin, and then selling and distribution. So it is 6:3:1. Okay. So here we will have the total. Okay, so this here is ratio, here is amount. Now we want to get the total amount. We know, what do we know? So just have a look over here. So we're going to say equal the sum of that. Okay, so it's equal to 10. We know that factory was allocated 117,600 Rand. So factory was allocated 117,600 Rand. And how it was allocated? Using this ratio over here. So to get, all we have to do is to get the total amount. All we have to do is to get the total amount. So how do we get this total amount? So to get the total, all we have to do, we know that 117,000 represents 6 pieces. The way we can get the total is simply to say 117 divided by 6. 117 divided by 6 gives us how what is the amount for every 1 piece. But we know there are 10 pieces, so we multiply it by 10. So we know the total amount is 196,000 Rand. This total amount of 196,000 Rand was split into 10 pieces. There's the 10 pieces. Of the 10 pieces, 6 went to factory, and that is why factory got 117,600 Rand. Now, for us to have gotten back to this thing over to the 196,000, all we did was we said 117,600 represents 6 pieces. So I said 117,000 divided by 6 gives me how much each, the amount of each piece. But I know there are 10 pieces. So I took the amount of each piece and I multiplied it by 10. So there you can see, I said 117,600, the yellow or the orange, divided by the purple, which is 6. So 117 divided by 6 gives me 19,600. That is the amount for every 1 piece. But we know the total number of pieces is 10. So therefore multiplied by 10, and that gives me 196,000 Rand. Okay, so this is the incorrect ratio. Now the correct ratio So now the correct ratio, so this here is correct ratio. The correct ratio they told us is 5:4:1. 5:4:1. So we want to get the factory. So all we will do, we will say 196 divided by 10. So now, once again, we're saying 196 divided by 10. What is the amount for each piece? It is still 19,600 because the amount is still split into 10 pieces. But now the factory only gets 5. So I say each piece is 19,600 multiplied by 5, which will give me 98,000 Rand. Okay, so therefore, what must we do to the factory? The factory needs to be adjusted. The factory needs to be adjusted by, we want that. It's currently sitting at 11716. So, we want 98,000. It's currently sitting at 117,600. So the adjustment needs to be this. So the adjustment is 19,600 Rand. So all we're going to do over here, by the factoring, we're going to say minus 19,600, which is that amount over there. Okay. What's happening? Wait, something's not right. Oh, minus. Okay, so that's what we want to do. So the adjusted amount is as follows. The adjusted amount is as follows. Okay, so that's not necessarily all part of the calculations, but I just wanted to show you what we needed to do. Okay, if you want to, obviously selling and distribution is not 100% correct because we still needed to make other adjustments. Maybe let me just do it for completeness purposes. So if I just say that divided by that times that. Okay, so what we would have to need to do to admin would need to, we had to add admin plus 19,600. Okay, so there we go. Adjustments is 0. This is just a reallocation. So there's the correct amounts now. Okay, so let's have a look. So now let's go back to this particular question. So the direct material cost, so the way you'd answer it in the exam is what we're doing now. Okay, so I just did this detailed calculations below so you can actually understand why we're doing what we are doing and how we get it. Okay, so direct material cost is going to equal 1650. Let's just do it properly. It's going to equal 1575, 123 plus 75,000 Rand. Okay, so how do we get that? It is 1757 plus 75,000. What was the 75,000? It is the 75,000 Rand. It was carriage on purchases. It was included in selling and distribution. It should not be in selling and distribution. It should be in direct material costs because it is a cost incurred on direct material. Okay, then we need direct labor costs. We were not given direct labor costs, but we were given prime costs. We were given prime costs. Prime cost 2550. Prime cost was given to us as 2550. Okay, so it was given to us. Okay, given. What do we know? We know that prime cost is direct material plus direct labor. So prime cost equals direct material plus direct labor. Okay, therefore, direct labor equals prime cost minus direct material cost. So therefore, this will equal this will equal that minus 1650. Okay, so it will equal 900,000. Then we have the updated factory costs. Okay, so the updated factory cost is that. Okay. So how did we get this? It was 518,800 minus 19,600. What was the 19,600? We had to adjust for the 19,600 as a result of, I can't remember what was it now, as a result of the water and electricity. And then we also needed to add 16,800. We also needed to add 16,800 for the insurance costs. Okay, so we also needed to add 16,800 for the insurance costs. Okay, so just be aware of that. So I'm just going to do it. 518,800 minus 19,600 plus 16,800. Okay, so there we go, 516. You can also see how we got it over here. It is made up of 518,800 minus the 19,600, which relates, 19,600, which relates to the water and electricity that was incorrectly allocated using the wrong ratios, and then also the direct, the insurance cost that was incorrectly included completely in admin, which should have also been included in factory. Okay, so that is basically that. So total manufacturing costs equals prime costs plus, so total manufacturing costs equals prime costs plus factory overhead costs. Okay, so factory overheads. Okay, so total manufacturing costs equals prime costs plus factory overheads. Okay, now we're going to need opening work in progress, and we're also going to need closing work in progress. So let's go have a look. So opening work in progress was given to us as 230,000. Opening work in progress was given to us as 30,000. Closing work in progress was not given to us. Okay, so we're going to have to work out what is closing work in progress. Now let's plug in opening work in progress. Opening work in progress given to us as 230. So therefore we can add this up to get an amount. Now all we're going to have to do is to get closing work in progress. So let's have a look how we're going to get closing work in progress. So closing work in progress is going to be, so closing work in progress is going to be the cost to produce a unit. Okay, so closing work in progress is going to be a cost to produce a unit. Let me just quickly see. So it'll be a cost to produce a unit times the number of units that are remaining. Okay, so let's just have a look. How many units are remaining? So we know, so let's just work that out. So let me just go back to, Excel, and we're going to work out how many units, how many work in progress units are there still on hand, and then the cost thereof. So let's go back to, So the way we can get cost of production is as follows. We know, so cost of goods manufactured, another way to say this is total cost of production. So we know how, let me just do this quickly. So we know how the total cost of production, okay? So here they're telling us the total cost production, 7,600 units were produced at the unit cost of 420. So using that information, we can just say 7,600 times 420. Okay, so this here is equal to 7,600 times 420. Okay, so that's what we know. So all this have to be, this is simply 3192 minus that. Okay, so this is simply, so closing work in progress, closing balance WIP equals TCP minus 329600. Okay, so that is just basically that. Did I just do now? What did I just do? 3296123. Okay, so just be aware of that. I'm just going to put here in brackets, this is TCP, so you know what is TCP. Okay, so there we go. That is basically how we, so as you can see, you must know exactly how this formulas work, because one number will help another, one total will help another number. So as you could see, with this number, we could work out direct labor costs. Knowing this and knowing that, we can work out closing work in progress. So just make sure you are able to work through that. Okay, so remember, total cost of production, another word called cost of goods manufactured. It is basically going to be the number of units times production costs per unit. The 420 is production cost per unit. The 7,600 is the number of units produced during the year. Okay, so just be aware of that. Okay, so there we go. So now next, what's the next question? So the next question over here is, calculate gross profit earned on sale of shirts, calculate markup percentage on shirts. So let's have a look. Just do this. So 2.1.2 gross profit. Okay, so remember they want gross profit, not gross profit percentage. How do we calculate gross profit? So remember, gross profit equals sales minus cost of sales. Now sales was given to us. So let's quickly see sales, cost of sales, cost of sales equals gross profit. Okay, just gonna leave some space here. Equals gross profit. So that's what we want. Okay. Now sales was given to us. Okay, sales was given to us over here somewhere. There we say 8,000 was sold for 4,860. So we have sales. So 4,860. 4,860, 1, 2, 3. This here is given. Okay. What am I looking for? Now we need cost of sales. Cost of sales was not given to us. cost of sales was not given to us, okay? So we need to calculate cost of sales. Now remember, how do we calculate cost of sales? Cost of sales is calculated as follows. So you must always remember the formula. Cost of sales equals opening balance inventory plus purchases minus returns minus closing balance inventory. Okay, now remember, in this case, we don't use the word purchases, we use the word production. Let's just be aware of that. So we can work out cost of sales. All we need is opening balance inventory. And this here, in a production question, in a manufacturing question, we're referring to finished goods. Okay. Plus production. So in this, so the word P for a retailer would be purchases. For a manufacturer, it will be production minus returns. Let me just write it, production minus returns, minus closing balance inventory. Once again, we're referring to finished goods. Okay, and this would give us our cost of sales. That would give us cost of sales. Now, opening inventory was given to us. So we're going to look under finished goods. So here we're going to look under finished goods. Okay, so we have 900 shirts at 380, and that's going to give us 342. Okay, so opening inventory is opening inventory is 342. 1, 2, 3. Production, we're going to get from 3.1.2. It's just basically that. Okay. Okay, so I'm just going to tell ourselves from 2.1.1. In a production question, there won't be returns. Okay, you don't return any of your own stuff, so there won't be any of that. Okay, now we're going to have closing inventory. So closing inventory, they told us there's 400 shirts. We just need to know the value, the unit price. So it is 400 times. So what you must know, it is going to be a cost per unit. Okay, so it's going to be a cost per unit. The cost per unit is 420. Okay, so therefore we're going to multiply this by 420. Okay, so it's, so this 400 over here is the number of shirts on hand. That 420 is the cost per unit, okay, which was given to us over there. So this is going to equal 400 times 420. Okay, but now remember, this must be minus because the cost of sales formula says opening balance plus production minus returns minus closing inventory. So cost of sales will be the sum of that. So then we can plug it in. So our gross profit, what's our gross profit formula? Sales minus cost of sales equals gross profit. Sales minus cost of sales equals gross profit. So our gross profit is a rand amount of 1940. If they wanted gross profit percentage, just as a side, okay, just as a side, not that you need it. If they wanted gross profit percentage, then you must know GP percentage equals GP divided by sales times 100. So the GP percent, if they wanted it, it would have been gross profit divided by sales times 100. Okay, it would have been 30.74%. Okay, so just be aware of that. But they didn't want, they only wanted that number. Okay, now we go on to the next. The next wanted markup percentage. The next wanted markup percentage. So markup percentage, you just follow the following formula. So for markup percentage, okay, so markup equals GP divided by cost of sales times 100. Okay, so we know what is GP, we know what is cost of sales, so therefore we can get markup percentage. So GP, we calculated over there. Cost of sales, we calculated it over there. So therefore, markup is GP divided by cost times 100. Okay, I'm just going to use Google Sheets, and there we go. Okay, so that is basically how we do it. Okay, so you must use your numbers above. They will mark you through if you use your numbers above. What I just want to do quickly, I just want to keep this calculations above. So I'm going to keep it here. Do some more. Guys, want to copy this, keep it under its where it must be. Cool. Okay, so there we go. So that is 2.1. Okay, so in the next video, I'll do question 2.2. If you have any questions, you can get hold of me. You can find us on our website at www.eduhans.co.za, or you can email me at info@eduhans.co.za, or you can WhatsApp me. Or you can WhatsApp me on 0. Let me just first make this text. Get me at 078-487-4902. Okay, so there you can get hold of me if you have any questions. So who are we? We are EduHans, and we help accounting students to pass the exams confidently making the difficult concepts really, really easy to understand. The way we do it is not just to show you how to answer an exam question. We do answer the exam question, but more importantly, we teach you a way of thinking so that you're able to handle any question that comes your way. Okay, so I hope you found it beneficial, and thank you very much.